Good morning, traders. Well, this is welcome to Digital Wealth Trading or Digital Wealth Academy. And on this episode of our videos, we teach you guys how to determine daily bias. So if I'm creating or if we are creating a weekly videos that will depend on the weekly bias, and we'll be teaching you guys how to determine the weekly bias and also giving you guys confirmation on what to look out for next week. So but this current videos is focusing on what today, which is Thursday. The Thursday is focusing on the Thursday price delivery, and also we I'm trying to deep down into Wednesday, as we did not give any update yesterday on Wednesday, which is yesterday, because basically I don't know. Well, if you are new and you're watching these videos, I do this video in morning, every morning Nigerian local time. If I'm doing or Thursday video, I'm doing it on Friday morning. Then Wednesday video, I'm doing it on what, Thursday morning, so that I will have the opportunity to have overall Nigerian market close and the New York market close, because that's are very important parameters which I make use of as the trader. So currently, I'm doing this Thursday market review for Friday morning, and I'll be referencing towards the Thursday and also be giving you guys what to expect today, Friday. So going today, Friday. So stick with me and let's walk. Let's walk this path together. Okay, so that was the network glitch. So the Euro US dollar daily contract for Thursday, 4th of April 2025 deliver indecisive bullish candle that closed below the weekly bearish order block and weak into the weekly fair value gap of BC, that is inside the weekly bearish order block and showing a decline from that point of interest. Artists treat it as an institutional order flow entry drill, or as it treats and feel it completely. Now let me explain that first statement. I am now saying that this Thursday price action, which is this indecisive candle you are seeing, I don't know if I has to or if it's clearly seen, yeah. But if you are a trader, I'm sure you have your own chart as well. You look at this particular candle that delivered indecisively. Yes, so I'm referencing towards this candle price delivery, and I'm explaining that this yellow line is our weekly fair value gap, and this bearish order block is the weekly bearish order block. This red line is the weekly bearish order block, and now we can see how perfectly the body of these candles are respecting that areas of interest. Forget about this one that is trading now. It is the Friday market already, because market has already opened and we are already trading. And this is almost, we're almost inside the new London session, but we have not gone that far in the London session. But so now we can see how price respecting that bearish order block. We price higher and close below that bearish order block, but it is still a bullish candle, but an indecisive what, bullish candle. That's what I mean by that very statement there. I am very pleased to see price trading and respecting all the areas of interest and also using the PDRAs, that is the PDRA we call out from the previous day journal and the weekly journal. So I am very pleased to see price have been respecting these areas of interest and as and treating it how we have called, and how we have expect the market to treat it. Rather, the only thing that's there is how we move significantly. You see this 2 day candle, this Monday and this Tuesday and Wednesday. The price was so significant, but that does not disqualify our setup. But the price move was so significant towards the upside. So I will be pleased if euro respects the consequent encroachment of Thursday uh candle wick and not trade above it and not trade above it, as we are looking forward to a lower price delivery and expecting that area to remain either on to remain tapped or but not price above it. What I'm trying to explain is that if you see this blue line, mark out this candle wick consequent encroachment, which is the 50% of between the higher and the opening price, or sorry, and the closing price of this candle. I mark out the 50%, and now I am looking forward for price to respect it and not trade above that area. Otherwise, that will mitigate, or that will be another sign of maybe price is going to continue, or there is something that is coming up that is yet to be noticed. So I will urge you as a trader to always have something you want to see and how you want the market to treat that thing. It is very, very important. I think that is what makes your edge as a trader. Now, casting forward, I am expecting lower price delivery on euro for Friday and next week price delivery, if and only if this scenario remain constant. Yeah, because for price move to be ideal, we want to see these whole things remain on top. Now, one will say, like me, I will say that this is yes, not I will. This is a bullish order block. But now, am I expecting the market to respect this bullish order block? No. And how will I know when if I'm right when price gets here? Now, I just want to explain something. If I'm right, if when price gets here, this is the high of the order block, right? If that is the high, the midpoint of that order block is here. All right, somewhere here. I don't want to go that far. Somewhere here. So if the midpoint of the order block is somewhere here, I want to see, as soon as we get towards this area, price should move faster towards the lower price. Like, it should not show any, as soon as we get to areas of this place, it should not show any sign of what of slow price delivery, either intraday price or on the daily time frame. It should just push through it and move lower. That is if and only if price is going to go lower. And also we can see today open, and now we have price below yesterday low, now taking the low, and also feeling the little feeling a little bit inside the fair value gap that was formed, that was created on Thursday. Because on the daily time frame we can see that there is a fair value gap here, waiting here and here, which is bullish, buy side imbalance, sell side inefficiency. But that is not something that should disrespect all this. But that could be the case if they are looking forward to deliver price higher. But the more ideal scenario right now is the price price m- price action for the weekly and the intraday, what the weekly and the lower time frame, or the weekly, daily, and the time frame is saying. So let's leave that and let's go to the daily contract for DXY, and let's compare and contrast. So this is the DXY daily contract for Thursday, uh, April 2024. Now we could see that also the DXY trade lower, and now we have filled the weekly fair value gap, and also taps on the very bullish order block, just a tick on the bullish order block. So, and we reacted off of that area impulsively and we traded higher. All right. So consequently, we am anticipating for price not to trade below the consequent encroachment of Thursday price. Just like I have said on Euro, I'm also expecting that on DXY, and I want to see price remain above this. As long as we remain above the consequent encroachment, then we are good. And also, um, on the weekly perspective, if price gets below, if price still get inside in the inside, like we get back inside this weekly fair value gap, then that is still ideal for us to look for opportunity to be a buyer. But as long as we don't pass below the consequent encroachment or the midpoint of the fair value gap. So that is also very important to call out. So as but now, why I'm not looking forward for price to get here anymore is because on the weekly contract for euro, we have filled that fair value gap completely. So if that is the ideal scenario, if we bring back that back into the XY, then we shouldn't have any reason to go back inside this fair value gap. So and we can see how price is respecting and staying above that areas of interest. So that is the ideal price scenario I'm explaining, and we only make use of DXY as an indicator for our own chart for euro trade. So be good, and let's see how price is going to respect these areas going forward in price. So this is the 4 hourly contract for Euro US dollar, and I will not waste our time. I'll just get back into what I have here. The Euro US dollar 4 hourly contract showed nicely how price delivered impulsively from Wednesday to Thursday. Thursday price rally higher into the weekly PDRA and showing a change in the state of price delivery after filling the weekly fair value gap and giving us a perfect what ICT unicorn model. Now on the 4 hourly contract, sorry, and showing us what the ICT a perfect ICT unicorn model on the 4 hourly contract, which is what we have here. Price go higher, value lower, giving us fair value gap, giving us another block, uh, and we there is a change in the state of price delivery here. That is, there is a swing low that has been swept. Or that, if you want to learn that, please comment on the give if you want to learn how to identify the ICT unicorn model, just let me know on the comment section, and I will consider if I had to do that video, if I had to create content to explain the ICT unicorn model. Now on the 4 hour, we can see that and on Wednesday, Euro delivered impulsively, leaving an leaving buy side inefficiency on field and rallying higher into the bearish order block, which market closed and opened for Thursday, that eventually rally into the weekly fair value gap and reprice lower impulsively after filling it, and also close below the weekly bearish order block. I'm just explaining everything I've explained to you guys earlier about how we treated the bearish order block and the fair value gap. I'm just trying to chip in more on a lower time frame perspective. Now, if Euro find its way higher into the newly formed 4 hour fair value gap and also tap on the 4 hour bearish order block form on Thursday price, I will be anticipating for a strong price move towards the sell side liquidity. And our draw on liquidity today is sell side delivery. So currently, what I have written this before it happens. Now I did identify that if price eventually find its way inside this fair value gap, which we just treated as an institutional order flow entry drill, and this bearish order block, and we tap on it and also tap on the inversion fair value gap. You can see there is a fair value gap here, and now we have treated as an inversion fair value gap. Now we are moving lower. Price is moving lower, but due to the fact that we have non-farm payroll coming up today, NFP news coming up today. If you check on your news calendar, it will be non-farm what unemployment. No, non-farm what employment claim or something like that on the news, but it's not farm payroll. That is it. Employment or payroll. So you need to employ somebody to pay them, isn't it? So it's just the same thing, but I don't know. Maybe they decide to change the language, but that is it. We have that news coming up by 2:30 Nigerian local time, which is by um what time? 2:30. That's by uh it's coming up 2:30 Nigerian local time. That is it's going to occur um 8 o'clock a.m. New York local time, right? 8:30 New York local time. So it's going to be morning session for New York. So that is as soon as the New York price open. So price might open New York and we still reprice higher. That is, that news usually move up before it goes lower, or we just see a sharp decline in price. So you please, I'm not telling you to go and trade this news today. You can actually just take read this whole situation. Don't go and get involved with your monetary value. Just take read this whole situation, and if it happens how you treated it, it will eventually stick to your head or your brain or your subconscious mindset, so that next time when you see it and you have everything in your palm, you can actually make use of it. So that's it for the 4 hourly contract on DXY. Now I think this is this is DXY 4 hourly contract. So I think this is very very clear. You can see how clearly it is on the Euro DXY, on the XY daily contract. You can eventually see how clear price is. So what I'm trying to say there is that we have the sell side liquidity, which is the weekly fair value gap high, and now we can see how market taps on it, trade it, and now we are going. It has shown a very sharp change in the unicorn price model. Also have been stated here in price. We can see how perfect this is, and also the fair value gap that was formed, we can see how price treat it and also treat it here. Now because of the non-farm payroll we are having, we could actually see market weak down into this area, but or even come lower and tap on this weekly on the daily consequent encroachment before going higher, but I'm not looking for price to go towards this area. And also you can take partial, sorry, I told you not to trade. So and also you can observe how we treated this area of interest. Now you see why price have to remain here for a longer period of time before going, is because of this volume imbalance. Now when you have a volume imbalance, price tends to price into it, continue giving us what a price move on that particular area, that is going up, lower, price through it, go into it, price through it, go into it, pass through it, and it will just keep using it. And if you observe clearly, go and look at all the correct volume imbalance, because there are some, if you are not using a paid service on TradingView, they might not give you all price the correct price volume imbalance. But whenever you see one, you can eventually understand. Even this, you see how we use it here, go higher, come back, reuse it, just going back to it all the time. So that is very important that we have that. So because we have lower time, we have less time to read. Now on the hourly contract, we can see that we have these areas of interest we want to see price get to. But now we only tap on the 4 hour fair value gap, and we have not get towards that area yet. And also this is the Nigerian opening price. We price above it. New York opening price, we price above it. What did I tell you in our previous video? That when we are above the Nigerian opening price and also above the New York opening price, and you are looking for way to be a seller, then that in itself is showing you how that you are inside the daily time frame, that you are in a premium price. That is, if these two things are above, if price is above these two level, then you are very good to go. So thank you. See you tomorrow.